There is someone in your investment account you have never met. You have never seen their face, and they will never send you a bill. And yet, by the time you retire, they will have taken more than you ever put in yourself. From the day you start saving, they become a partner in everything you own. Every dollar you contribute, they take a share of, and every part of it is perfectly legal. They never call. They never send a statement of their own. In 40 years, they will not say a single word. Yet, add it all up on the day you retire, and the total this silent partner has taken is staggering. That partner is not a person. It is a fee, and it hides in a single line on your statement. No one here has broken a law, and nearly everyone is carrying one of these partners inside a retirement account or a fund they already own. Most of us know exactly what a morning coffee costs. Very few know what this costs us year after year. So let's do something simple. 2 people, 1 pile of money, counted a single bar at a time using numbers anyone can verify. This is Maya and this is Dan. Their accounts are identical, but for one detail, the fee. Dan's takes almost to nothing. Maya's takes 1% a year. 1% sounds like nothing, but it's taken from everything she holds, every single year. And the more she accumulates, the more it collects. On 10,000 saved, 100. On a million, 10,000. For the exact same service. It also makes no exceptions. In the year the market fell and her balance dropped, the charge did not pause. It still took its 1% of everything that remained. 40 years, laid out in bars. Each bar is $10,000. Both save $500 a month, and the market returns about 7% a year on average. Some years higher, some lower. Dan retires with about 131 bars, roughly 1.3 million. Maya, just under 100, about a million. Same salary, same savings. Watch the gap between the 2 lines widen. They earned the same and saved the same. So the gap between the 2 piles is the fee, and nothing else. Over 40 years, it reached 32 bars, more than $300,000. Of that whole pile, Maya put in only 24 bars of her own money. The fee took 32, more than she managed to save in her whole life. And the real cost is larger than it first appears. In retirement, planners use a rough guideline. You can withdraw about 4% of your savings a year before you risk running out. Measured against the 4% you can safely spend, a 1% fee isn't taking 1%. It's a quarter of your income. For every $4 you draw to live on, the fee quietly takes a fifth dollar too. Straight from your savings, on top of what you spend. This was never really about 1%. It's how far one number moves a lifetime of saving. At 0.1%, it takes almost a nothing. At 2%, nearly half. Same paycheck, $500,000 apart. This number has a name. It is called the expense ratio, or the MER. It sits as one line, usually in small print, on every statement. Maya's read 1%, Dan's close to 0. And here is the part that should feel like good news. You cannot control whether the market rises, or pick the winning stock, or time any of it. This one line you can. A generation ago, 1% was normal and hard to avoid. Today a near zero option sits right beside it, which means 1% is no longer fate. It is a choice. Cheap isn't automatic either. For exposure to the very same market, one fund can charge many times what another does. Same market, very different price. And which side wins isn't opinion. It's in the record. Morningstar looked at thousands of funds. Cost was the most reliable predictor of returns, and the pricey stock pickers beat a simple index only about 1 in 5 times. Roughly 3 zones. Under 0.25% is clear, 0.5% worth a question, 1% and up is where it bites. Dan made that choice once, in about 2 minutes, 40 years ago, and never looked again. Maya never made it at all, and she didn't even need a free fund to lose out. Against just an ordinary low-cost one, she still gave up about $280,000 for a single line she never read. In fairness, and there is always another side, that partner is not automatically the villain. Sometimes 1% does buy something real, a fund that spreads your money across the whole market, or an advisor who, in a downturn, keeps you from selling everything in a panic, which can be worth far more than it costs. And zero is not magic either. Cost can still hide. In trading, in taxes, in a fund that quietly lags the market it is meant to track. Nothing is truly free. So the honest summary is simple. A small transparent fee, paid for something useful, is fair. A large one, taken quietly for something you could have had for almost nothing, is the trap. Investment management should be the floor. It should not be the ceiling. So the difference between Maya and Dan was never luck, never skill, never a better set of investments. It was one number, and whether anyone ever looked at it. Maya spent 40 years watching everything except that single line, the balance, the rises and falls, all the things beyond her control, and never the one thing within it. That same number is on a statement somewhere right now. One line of small print, easy to scroll past. Most people never notice it is there. Maya noticed in the end. It took her 40 years. You are seeing it a good deal earlier. So sometime this week, open your own statement and find that one line, expense ratio, or MER, 30 seconds. It may be the most valuable number you'd look at all year. This channel is about exactly that, one honest number at a time.